to our DVT Insights session. Thank you for joining us today. It is a rather special session that we have in store for you with Mr. Neelan. Mr. Neelan is one of the most innovative and driven executives I've had the pleasure of encountering. He is someone that is deeply involved in the FinTech space and has certainly been instrumental at Sanlam in terms of bringing data in as a key strategic advantage, as well as the creativity of leveraging technology to drive the business. Neelan, thank you again so much for taking time today to join us and talk to our audience in terms of the work that you're currently doing, and specifically in the FinTech space. I'm going to just remind our audience that, as per usual with these DVT Insight sessions, Neelan will have the floor for around 45 minutes, after which we will take your questions. Please raise those in the chat window. I will then moderate those questions and pose them through to Neelan. And you are free to raise those during the course of the talk. I will have access to those, and I will have those in store for Neelan at the point in time when we do Q&A. Neelan, I'm going to hand over to you, sir. I am greatly looking forward to your session today. And again, thank you so much for joining us.
Thank you, Carl, and thank you to DVT for giving me this opportunity to share with you my vision around payments, digital, and data. I'm going to run through this and I hope you find this informative as well as enlightening, especially in the economic landscape that we operate in. So a little bit of background about myself. My current position is I'm the CEO of Sanlam Multi Data, and that business is responsible for what you would call collections and payments of transactions. My previous experience extended to the CIO of Sanlam Reality, and have been in BI, data roles and IT roles in my prior experience at Investec, Silica, and Standard Bank. Overall, I've got about 26 years of industry knowledge, and that spans across loyalty and reward, insurance, banking, vehicle and asset finance, credit debt management, internal auditing, fund administration, both at a retail and institutional level, as well as payments. And just some context for you, the business that I work in is called Multi Data, and we process 5.5 million transactions monthly. I've got 30 internal clients and 300 external clients, and we provide services like debit check, e-commerce, and payments. So I'm talking through a payments lens today, but from on FinTech enablement and FinTech approaches. Just from an experience perspective, I've got a BSc degree in Maths and Stats, and I've also got an executive MBA through FinTech. I'm not going to go through all of the skills on the slide. It's in my recording, so you can go through that. But my background spans technology, it spans data, and more recently, it spans payment. So for today's session, how to succeed through digital transformation and winning CX strategies, I'm going to take you through a journey, and the journey is a journey of money. And you may wonder, what does that have to do with digital transformation and CX strategies? You soon will find out why I've taken this journey. Firstly, it's a passion of mine, but also through this journey, you start to understand how the world has changed around us, as well as where we as organizations need to be readjusting in order to adapt to the changes that are around us. So agenda today, we're going to look at the current state of global payments landscape, as well as the changing state of the global payments landscape. And I'm going to cover aspects on political changes, rise of fintechs within a payments landscape, as well as shifts that are happening in the emerging economies. I do overlay this in the context of the African continent as one of the larger growing emerging economies when you look at that in contrast to India and China. Data position, you've heard Carl mention earlier, data I'm very passionate about, but data is an unlocking ability in how we drive change at an organization, at a business, and at a client level. I'm going to spend a little bit of time sharing some of my personal insight from a fintech mindset, This is not theory, it's more my personal experience in terms of how I've connected from a FinTech perspective. And then we will end for questions thereafter. So let's talk today very briefly about money. Now, when we talk about money, we tend to think of money as, in American terms, dollar, or if we look at Europe, the euro, or any country as some form of currency, which is in the form of notes or coins. However, money is a little bit broader than that when you look at the history. And when we use the term money, money actually represents a medium of exchange, meaning we can buy and we can sell. It's a store of value. For example, I could argue that my mobile phone is a version of money because I've paid a certain price for it. It's a value that I attach to it. As well, it's money creates standardization. So when you look at currencies, standardization is, if you are in a particular country like South Africa, rands become that standard currency, then everyone relates to that and you can comparatively assess how much you are paying for things. Now, the whole concept about money is not just notes and coins as we know it today, but money's got a heritage, right? So if you go back to 9000 BC, money was in the form of bartering, where trading of goods would happen based on what people needed versus what they were willing to let go. That matured a little bit into cowrie shells, which became a unit, then minted coins, and then in roundabout the World War I, World War II time, gold became that standard, and post-World War II, we've got what's called the Bretton Woods system. And the Bretton Woods system is what you and I today know as currency or money in different forms, rands, dollars, dirhams, it doesn't matter, but that's the Bretton Woods system that came into effect, where it's still backed by gold, but we trade at a more portable level with notes and coins. And as most of you all know, cryptocurrency is basically the next leap in terms of money, but that's a whole nother wave in terms of how money is becoming more digital. So when you have a look at this, I've covered a lot of this already, but we've taken this transition from bartering with gold, with coins, and then paper money. You extend that today in the context of how we as individuals spend money. Debit cards, credit cards, that's our mechanism of money. So suddenly you see paper is now in the form of plastic. Electronic transactions, we all do e-commerce, online transacting. So that's also how money flows happen. And as I said, the world of digital assets and cryptocurrencies. So important to understand the landscape in which we are playing, right? So if you have a look at this, this is some research that was done by McKinsey. And in 2021, they estimated that transaction flow, buying and selling, attaching a value to it, was about $2.7 trillion. Now that's the known world. We're not going to talk too much about the unknown world, the dark web, or the informal markets, because there are arguments that says that the informal markets may actually be almost as large, if not larger, than the known world when it comes to transaction and money. So looking at global shifts, and I want to highlight a few things over here, and you'll soon start to understand why I'm talking about these things. So when you have a look at things like debit cards and credit cards, the growth potential of those are not significant, right? So if you look at credit cards as a line item, as a payment method, we basically are declining. You look at debit cards, there's also a decline. So where is growth happening? Because people need to pay for goods and services. The growth is happening in terms of digital or mobile wallets, or more appropriately referred to as non-bank wallets. So that is now an extension of enabling transacting capability outside of the traditional systems. And as a result of doing that, you start to stagnant growth in what's called the traditional methods of payment. So the list in front of you is the traditional methods of payment that can extend even to things like I pay using a QR code, I pay using a mobile number, I authorize transactions with biometrics. Now, Those are evolution in terms of how we as consumers transact with money. But the enablement of that is embodied in what you would call digital wallets that enable transacting in a different way that also has the potential to disrupt banks and other financial institutions that have entrenched themselves in delivering on financial services through normal money movement channels. So the area that I want to delve into next is having this little background about money and a store of value and what's happening, or what the landscape looks like at present. What's driving the change with regard to money? And this is at a global level. So one of the key drivers is political changes, and I'll speak a bit more about that now. The other driver is FinTech. Now, we don't necessarily correlate money with FinTechs, but I will show you examples now in terms of how FinTechs are causing disruption in terms of what would have been traditional services offered by banks. And the third area is what's happening in the emerging economies. Now, why do I stress emerging economies? Is because the global growth potential lies in the emerging economies. I know I have colleagues on the call from Europe as well as other areas. The projection for the future is that growth is going to sit in your emerging economies rather than in your Americas and in your European countries. And that's largely because of a population dynamic or demographic, as well as shifts in population growth that's projected to happen over the next 30 years. So the irony here is, go back 50 years in time, things were more predictable, right? The way financial systems worked, the way insurance systems work, there was a lot more predictability. We're moving into an era where the future is uncertain, but we're moving into an era where change is happening. Where that change is going to take us, nobody really knows. We've got lots of projections and predictions about where it's going to end up, but it's all based on some form of hypothesis. So it's very important to understand in a landscape that we are in right now, our future is really uncertain. So planning business strategies, planning project delivery, you are dealing with the concept of uncertainty, or the other phrase they use is VUCA, volatility, uncertainty. So you're moving into a space where we don't really understand. However, we've got to seek to understand within certain contexts and parameters. And if you look at what's driving this change, climate change, big move towards ESG investment, digital wallets, embedded finance. Embedded finance is where every non-financial institution, every non-bank business wants to become a financial services business. The drive towards digital identity and digital assets. South Africa and other countries are already talking about central bank digital currencies. Some have implemented that already. The metaverse, yes, quite a young concept, but the metaverse is going to start changing how digital transacting happens in the future. So these are all considerations in why we say we're moving into an uncertain future. So bringing you back to the Bretton Woods Agreement, and specifically on the US dollar. Now, it's important to understand the power of the US dollar and the things that are happening in the world today that threatens the position that the dollar holds. Now, post-World War II, the US was the country with the richest revenue, largely because they funded equipment and ammunition for the war, and they sold that off and they generated revenue from it, while the rest of the countries around the world were declining. So what happened post-World War II? You had the Bretton Woods Agreement. You then had currencies around the world that pegged itself against the US dollar, which was backed by gold. And then the other big move that the US made was they managed to secure the sale of oil in US dollars. So what that fundamentally means, they had massive control over the economy, because now they would hold other currencies in dollars, as well as they control oil, which is one of the commodities that drives industrialization, and they peg that against the dollar. So that was where the US found itself, and today, as a result of that, it created dominance in itself as an economy, as well as in its currency. Yes, we've had others that have been a spin-off since then, like the euro, but ultimately, the US still holds the strongest footprint when it comes to reserves globally. Now, let's take that a little bit further. So when we talk about card companies, and all of you all use debit cards and credit cards, on your debit card and on your credit card or the card from your bank, majority of you all will see either a MasterCard and a Visa logo. So where are these companies? They are in the US. So what does it fundamentally mean? Whether you're in Europe, whether you're in Switzerland, whether you're in South Africa, when you tap your card or when you swipe your card, you are generating revenue for a US company called MasterCard and Visa. Why? Because the transaction flows, they've created this global network to allow transacting across multiple countries, but ultimately they do benefit from the revenue that is generated by that transaction from countries across the world, and ultimately that ends up in US dollars. The SWIFT system also created this context about global standards with regard to transacting, and that also now has created a network that's very much US biased because of the amount of money from other countries that sit in US dollars. So if you look at the US dollar through the lenses of currency trading or forex trading, you can still see against the euro, against the Japanese yen, and against the USD, that's roughly about 40% of trading is already against the US dollar, right? And there are other smaller ones here on this side. But what does that tell you? The US dollar against other currencies is the most traded currency. Now you look at that in terms of the reverse side of that. When you talk about trading and moving money from one country to the next, somewhere in that pipeline, there is a US bank. And whether that money goes from Indian rupees to US dollars, there's a US bank, and hence those reserves sit in US banks. Why am I telling you the story? That is how the US was able to freeze Russian that was sitting in US banks, demonstrating the power of the US and the power of the dollar. I'm not putting a political spin here. I'm merely stating how the world is run from a money perspective. So now let's take fast forward to 2021, 2022. What's happening around the world? So firstly, when you look at India has done two fundamental things. So India, through its UPI initiative, Unified Payments Interface, and I use this as an example because you could regard that as a FinTech that has now reached scale, but it was also backed by government regulation, where India has created its own platform for card acceptance directly in country. What has that done? That has basically redirected any transactions that would go to Visa or MasterCard, which cut off their revenue from India with about 1.2 billion people. And the use of this is growing in India, not because it's an alternative, but because it's virtually a zero-fee transaction, because it's an in-country transaction. And that is how India as a country has started disrupting the market in terms of their own capability. Then you look at some of the news this year. India, with all the instability around Russia, Ukraine, the war, India and Russia, India and China are entering into agreements to peg the Indian rupee as the trading currency and not the US dollar. Where this will take us, we actually don't know. But what are we seeing? We are seeing the shift in terms of the dominance of the US dollar are now being disrupted by countries that have large population bases that are driving the change because they are looking at the interest of their own citizens, but also for their own benefit. Let's look at Russia. We said they were cut off from the SWIFT system. But very quickly, being cut off from the SWIFT system, they were already looking to trade between the ruble and the rupee. So already piggybacking off an alternate messaging system that existed between Russia and India. So what will that do? It allows Russia to continue transacting in monetary systems, just not with SWIFT, but it's then the impact of the US freezing Russian money in US banks is not as material because Russia continues trading. And that extended further into oil purchases, into trading with India, into trading with other countries as well. And now look at most recently in the news, Saudi Arabia is in talks with China in not to buy oil in US dollars, but rather to buy oil in Chinese yuan. So we don't know what's going to be the impact of this. One hypothesis is that it's going to start impacting on the stronghold that the US has because of the US dollar. It's uncertain as to how far that will go, but these are leading indicators in terms of how the world is changing from political decisions that are being made, especially in emerging economies. So let's look at the rise of FinTech. Now, some of you may be familiar with this. Let's go back in time. So when you look at 2007 and even 2017, and you look at the top 10 companies by market capitalization, they were oil and gas companies. Yes, Microsoft seems to be the only tech company that survived. But they were oil and gas, they were motor manufacturers. Fast forward 10 years from there, 2017, they were pharmaceutical companies. You can start to see the likes of Amazon started coming up. But look at today. So when you look at today, the top 10 companies in the world in terms of value are tech companies, right? But what have these tech companies done different? They have enabled and they've embarked on digital journeys. Digital journeys from a technology perspective, digital journeys from a data perspective. And if you have a look at this, from all the 10, all are actually tech companies except Saudi Aramco, which is oil and gas, where it's still one of the leaders from an oil revenue perspective. But besides that, the world has changed. The top 10 companies globally has shifted. And the drivers is today, tech companies are dominating the world and dominating the market. And you can see how digital and data, leveraging that over the last 15 years, has changed the landscape where tech companies are now in the top 10, where they didn't even exist about 20 years ago. Now, let's look at this through the lenses of banking, financial services, and what's happening around the world. Now, I like the use cases in China, and it's largely because of policy. It's largely because of the way the Chinese government operates. But China, through some of its technology players, has used technology platforms to drive financial services, and they provide technology and they provide financial services on the back of those technology platforms. So let's look at examples of Alibaba. So all of these circles that you see down here basically says that Alibaba, which if you are not familiar with, Alibaba is the Amazon of the East. And Alibaba, as an online e-commerce platform, not only sells goods, it provides payments, account management, credit, insurance, asset management, shareholding, data, and cloud services. So suddenly, you are not looking at Alibaba as a tech company, you're looking at Alibaba as a financial service. And that's the shift that is happening globally. China is ahead of the pack. When you look at the US, you can see that this trend is starting to happen. Amazon, with PayPal, with Apple, with Google, but their maturity is not at the same levels when you look at financial services and banking through Chinese organizations. So that's a shift that is happening in how fintechs that started off as small little shops around the corner that have now expanded, become digital, and driving a digital agenda in order to not just do what they did, but extend their services into financial services. Why is that important? That if you can be relevant to a client in all aspects of their life engagement and especially their financial services, you can retain that client and you can get a greater share of their wallet over a longer period of time. Now, some of you all may not know that. So in the US, you've got the Chase Bank. So there's Chase for personal customers and Chase for business customers. Now, has anyone ever thought about Amazon as a bank? Probably not. But when you look at the services that Amazon provides, Amazon's a bank, right? But here is a large e-commerce platform that is actually providing banking services that is keeping revenue away from the banks and growing its own through the solutions that it provides. So from an Amazon perspective, they do debit and credit cards. They do prepaid cards. They do insurance, right? From a merchant or business perspective, they've got merchant services. They've got point of sale devices. They've got business credit cards. They do loans and they do lending. So when you look at this, it sounds like Amazon's a bank. Now that is the transition and the shift that is happening globally because companies have realized digital and data is the ticket to the game. If I can engage with clients more frequently, I can extend my services. Most of the services that Amazon provides is backed by Chase, but Chase doesn't have the client. Amazon's got the client. So Amazon then maximizes their revenue by increasing their service offering, and they become a super organization because they are now going beyond just their standard e-commerce online service. So let's look at emerging economies now. So different perspective. What's happening in China and India? So if you look at a measure which is called real-time payments. So just for context, real-time payments means pay person A to person B, money transfer occurs almost immediately or within 30 seconds. India and China are leading in that. Even in South Africa is going to have its first version of real-time payments only in March next year. So you can already start to see where the shift has happened. So India and China are the leading countries when it comes to real-time payment transaction processing, right? And what has that done? That's accelerated their payment capabilities in emerging economies. How do they do that? They do that through the unified payments platform in India. They do that through super apps like Alipay and WeChat in China. Now, that is important because, again, it's at the back of a digital engagement with their customers. Now, the slide, I want to, yes, let's go back here. So when you look at emerging economies, now, the African continent is regarded as a highly unbanked continent. South Africa is a little bit different because South Africa has got far more penetration in terms of banking services. But what you're starting to see in terms of the shift on the African continent from 2014 to 2021, where the darker blocks is an indication of how mobile money solutions have grown in prominence over, and this is over a period of about 5 or 6 years, right? What is mobile money? Mobile money is wallet-based solution. Who's driving mobile money? Telcos. Telcos are not banks, but they are acquiring customers at scale through mobile money solutions where banks fail to acquire those customers. Now, these are specific nuances in emerging economies, and that's why they regard Africa, India, China as growth economies for the future, largely because of an untapped market segment. And if you don't have access to financial services, you never get to be part of the financial system of a country where mobile money and wallets are looking to address that very solution. But in the process of doing that, it is disrupting banks. Now, this graph on the right-hand side, you may not read the legend. This is China, this is India, and this is Africa. The little dark blue block at the top is the growth potential from now to 2040. So which economies are going to be growing over the next 15 to 20 years? Africa from a population perspective. Africa with the youngest youth population on the continent. What does that mean? There is a new species and a new breed of people and young people that we don't really understand. But it's a breed of people that's going to be growing in numbers, that have financial needs, that have employment needs. And it's about how we as organizations become relevant in how we package solutions that drive adoption and drive that change. And what you're starting to see is that the rapid growth with non-traditional money solutions is happening in Africa. In South Africa alone, in this year, I've seen a bank come out, I've seen notification of another bank wants to start up. I've seen wallets that have popped up. I've seen retailers that are providing banking services. Just in this year, that tells you that the change is happening and it is happening rapidly. So when you look at this again, globally, you can still see that majority of the unbanked, or there's a large portion of the unbanked in Africa, and hence it's still a community or a continent where when we talk about financial inclusion is a priority. So from a Sanlam perspective, one of our strategic pillars is to drive financial inclusion and increase wealth among citizens on the African continent, because we operate in about 32 countries on the continent. Now, the important thing about financial inclusion is you not only create wealth for individuals, but you help them to progress into different levels of income earning. But financial inclusion in terms of credit and insurance and banking can't solve that. You need supporting economies. You need things like agriculture that actually become levers to change, where you create whole new economies that become productive, that become part of a financial system where you now start broadening your market segments. So just some trends about what really happens on the continent. I'm just going to pick on one or two of these. We can see that from studies in Kenya, because women had access to mobile money accounts or mobile money or wallet-based savings accounts, they started to make healthier decisions on food. Why? They've become part of a system. They started making better decisions because they found a way to save. And as they would save, they would buy food in bulk. That is an example of how driving a financial inclusion agenda can have far deep-reaching impact into the community. The other one, in Bangladesh, as an example, they found that workers that received money via cash, or workers that received their money paid into their wallets or their mobile money accounts, actually had a higher savings potential than those that received cash. So you see these subtle shifts here from a consumer side in terms of how mobile money and wallet-based solutions drive a change of behavior at a global level. Okay, just keeping an eye on time. Right, let's accelerate a little. So when we talk about, so that is a landscape about what's happening globally, where fintechs are playing a role from a digital and data perspective. So I overlay data from a completely different lens. So when you look at data, I look at it through two different lenses. One is the rate of data growth for us as individuals, for countries, for businesses. And if you look at that, data growth of the next 3 years is expected to at least double, right? Or more than double. And we're no longer talking megabytes, terabytes, we're talking zettabytes. There's just too many zeros at the end over there. Excuse me. So data expansion is happening. But that means, so why is data growing at that rate? It means more data is being collected. But from where? IoT, personal data, social interactions. So guess what? The digital companies like Google, Apple, Facebook, Instagram, TikTok, Amazon are going to know about me because they are the ones that's doing this kind of data collection. Now let's look at another lens. Let's take your business as an example, right? And if I talk about my business, an insurance lens, it's a shocking statistic. when you look at the rate that data is growing globally, my insurance company probably has got about, that may even be an exaggeration, about 2 gigs of data about Neelan. My personal details, my insurance policies, my deductions on a monthly basis, that's about it. Maybe some of my marketing preferences. Google has got loads more about me. It's got my photographs, it's got my calendaring, it's got my email, it can overlay AI on all of that data to draw insights about Neelan. So when you start to look at this, most traditional businesses have no chance of survival unless they change the narrative on how they look at data from a customer lens perspective and not from a business lens perspective. And that's the story behind the slide, because data, regardless, is growing at explosive rates year on year. As organizations, the less data we have, the less we know about our customers, the less we can become relevant in their lives with regards to goods and services. And there's some cliches here, right? But when we talk data, we must get a bit smarter about this. My experience with data in the past is we do great jobs about collecting data. You actually don't know why we're collecting it. So the whole intent is when you embark on data initiatives and data collections, and whether they are separate from your mainstream data solution, you've got to have purpose in mind, right? And the purpose in mind is about why do I need this data? Because quite often we go down a journey, no, let's collect everything, maybe we'll find purpose. No, you got to do it the other way. You got to identify what objectives you want to achieve and make sure you collect the data that is relevant to help you to achieve those objectives, and then augment it to enrich the insight of those objectives. And just in terms of data collection, the whole premise about data is to be able to collect data for a recommendation or to take action, not to collect data just. So if we are not driving out recommendations and if we are not driving out action, we're actually wasting our time and we're wasting a lot of money with regard to data. So bringing it all together, when I look at this through the lenses of digital, data, payments, I overlay aspects of innovation, creativity, data, collect, curate, take action, payments. Understanding transaction activity at a client level is a version of intimacy. Collectively, when you look at all of that, you actually start driving business results and you start solving real problems for real customers. Now, I want to spend a few minutes, I've got 6, in terms of FinTech. So my learnings from a FinTech perspective, and I overlay this into a few blocks about customer value proposition, market segmentation, what problems are you trying to solve, innovation, and cost management, right? So if you overlay the intro here, the stats tell us that more than 80% of startups or FinTechs fail, right? That's a shocking place to find yourself in, especially when you have an awesome idea, but your likelihood of success is extremely slim. So you got to change the way you think about how do we drive a FinTech agenda, even in our large corporate organization. So very important thing, when you think about customer value propositions, now, what I am learning is that you've got to start to intimately understand your customer. Do not make assumptions about what your customer needs, what your customer does. Get down on the ground, spend time with them and understand what is really going on. Why is that important? If we take a far-looking view to our customers, we overlay that with our own paradigms and our own biases, whether it is the mindsets we hold, whether it's the stereotypes that we hold, whether it's perspectives of religion, belief, or culture, those all overlay our thinking when we think about a customer value proposition. So in order to break that, you need to get closer to the ground. And also, when you think about the customer value proposition, if you can't answer the questions, is it better than my competitors? Is it easy to understand? Am I getting rid of hype? Do I actually have tangible results? Then we're missing the mark when it comes to a customer value proposition. Market segmentation, we as organizations do so much of work in terms of understanding the segments. We understand Gen Xers and Gen Zs and millennials and senior citizens. We look at income bands, we look at digital opportunities, we look at competitors, we look at sub-segmentation, we look at it through all of these lenses, but we look at it from a bird's eye view, and we make business decisions and investment decisions without intimately understanding the market segment. And the market segments that we operate today, especially from an emerging markets, are subsets of all of this. Even within a Gen X market segment, there are subsets because there are people with different earning potential, different lifestyle, different family structures. And if you are not looking at things through those lenses, it's a hit and miss when you put solutions out for the market. What problems are we solving, right? So as technical people, it's very easy to solve technical problems. But the challenge to you today is, are you solving a technical problem or are you solving a human problem? And that is so important because when we think about innovation, we often think about, oh no, we need to do something big. Yes, that's true in part, but solving an issue that is recurring, that impacts on individuals on a day-to-day basis that can be small, but because of scale, you've had tangible impact. That's what really matters when it comes to problem solving. And when you think about this in the context of solutions that you build, you're solving human problems, but you are building technical solutions that should allow you to scale, right? So right up front, when you're thinking about solutions, you should be thinking about solutions that can scale, because there's nothing better than being in a situation where I expect to have 1,000 customers and I have 10,000. That's a good problem to have. The other aspect is when you think about innovation, innovation is underpinned by certain principles. I heard this earlier as well today. If you want to go fast, go alone. If you want to go far, go with others, right? Most of you all may have heard this, but when you start thinking about innovation, you must also bring together people that help you in your vision, in your ideas, and are catalysts for change, right? So you're going to have the creators, you're going to have the catalysts, and you're going to have the champions. You need to surround yourself with people that will help you push your ideas forward, but also exercise objectivity. And the last one over here is think big, start small, and move fast. Quite often when we think about innovation, we spend a year, maybe even longer, thinking, then analysis and business requirements, and we try to solve all possible problems, and we really don't get off the starting line, right? Think big means have the vision of what you want to achieve, but start small with the aspects that may not even be the ones that yield the results, but are things that you believe as a team that let us put this out, learn quickly, meaning put it to market fast, so move fast, learn quickly, but have the ability to iterate and change quickly as well. And when you look at fintechs and when you look at startups, when you take a bird's eye view, we think that success looks like a straight line, but that's not true, right? The turmoil that goes on in the start-stop culture, the failed attempts. So ultimately, there's a lot of work, rework, change of thinking, new learning that goes into ultimately understanding or ultimately getting to the point of success. Now, for those that are in large corporations, very important to understand, we all complain that large corporates can't innovate. Why? There's governance, there's security complexities, there's the way we work, things take too long to land, teams are too slow, right? But you must also understand that a large organization and a large corporate is like a large ship. A large ship cannot do a 180-degree turn immediately. It turns slowly. So the same approach happens in large corporates because nobody wants to let go of the goose that laid the golden egg. Nobody wants to let go of the revenue generating business, even though it may be a legacy business. So the need to change is incredibly slow and very resistant at the same time. So the stuff that I have learned is if you want to drive innovation in a large corporate, you firstly need someone that's going to support you, especially at an executive or sponsor level. But also you got to do these things on the edges, right? Now, the example that's used is snow melts from the edges. So when you look at an ice area or a snow area, it's not the snow that's in the middle that starts melting first. It's the snow that's on the edges that start melting first, because the snow on the edges is the thinnest as well. But why is that an important analogy? That's where your innovation starts. That is where your innovation creativity starts. Why? You're not affecting the mothership. You are not interfering with the mothership, because the mothership's going to give you resistance. You start on the edges, you start quietly and slowly, and eventually you got to prove your success in terms of your ideas and your innovation, and then over time they will become integrated into the large corporate business. And the last one, cost management. So why do most startups fail? Personal funding, venture capital funding, and before you know it, they've run out of cash and no one can support their ideas. So true agility is really important in how you deliver. When you want to take a FinTech approach, don't look at employing large amounts of people in order to deliver, because that's burning costs if you're not clear on what you're delivering. Take a POC approach, deploy quickly, learn and revise. Learn from what the market says. Don't assume that that's what the market wants. Start with a lean team, choose partners wisely, meaning partners that support you, as well as if you're in a large corporate, having that big brother support from a financial perspective is absolutely beneficial. So I'm ending now, and the things that drive me and the things that I live by is my choice is to be and drive the change, right? In the area that I find myself, in my role that I find myself, and in the things that I do. Seek to understand, really important. We don't spend enough time trying to understand, and when we don't understand, we actually don't solve problems. Use your circle of influence. You've got contacts on LinkedIn. You've got contacts in corporate world. Use your circle of influence to drive real change. Do data for good. Sounds ordinary, but the amount of impact in there is do data for the right reasons. Do data to achieve the right outcomes. And ultimately, we should be looking at this through the lenses of how do we make people's lives better through the solutions we create, through what we put out into the market, because ultimately, if you are making people's lives better, you're suddenly creating a customer base that is interested in you and wants to talk to you out of their own choice, not like the way we approach it today. We kind of poke and poke and poke and hope customers respond. So thank you very much, and I will end over there.
Neelan, fantastic. Thank you so much for presenting that today. We really appreciate you having shared your insights there. If I can ask our audience, please, if you do have questions for Neelan, please log those in the chat window and I'll pick those up and pose them to you, Neelan. I think in the interim, Neelan, I'd ask you to perhaps extend a little bit further. I really picked up on that. The ice melts on the edges, right? For you, in terms of personal experience at Sanlam, how did you get this going? How did you get an organization like Sanlam really buying into the innovation, the adoption of technology, and going down the road of FinTech?
Thanks, Carl. So to paint a picture for you, Sanlam's got a growth objective. So today, Sanlam's got 20 million customers globally. And the growth objective over the next 5 years is to acquire an additional 50 million customers globally. How is Sanlam doing that? Through partnerships like with MTN and Allianz, which is public information, but also in its own business, it needs to innovate. So the traditional insurance business in South Africa, we talk about legacy businesses, so paper forms and applications. Some of those have transformed into digital businesses, but it's pretty much the same thing. I'm just selling insurance on a digital channel, where now we have put forward a proposal to the board to re-engineer the way we work. But that had to be backed by some form of evidence. Evidence is what's happening around the world globally, market research, right? Because those are informing trends. A lot of what I've shared with you already. The other aspect of it was demonstrate the potential of this. Look at what competitors are doing in other markets. And because that informs a growth potential. And then we put forward a plan of action in terms of how we would do it, numbers, as well as forecasts in terms of client acquisition, which ultimately then links into how does that affect the share price of Sanlam, because that's what matters at the end of the day. And that was a proposal that was put forward to the board, sold to the board, and that resulted in approval. And now we take the necessary steps to now mobilize the entity being a FinTech and then drive out the new game plan and the new digital strategy for Sanlam.
Fantastic. And Neelan, that will lead into a question by Peter on effectively GDPR and data, etc. You having such a strong background in the data space and having seen firsthand the capability and power that you can, well, power and influence, and I'll probably use that word deliberately at this point in time, the power and influence of data to actually affect decision-making and business decision-making is phenomenal, but it's also comes with risks. You spoke about the availability of personal data within an organization, and there is legislation like GDPR, and in South Africa, its own version in the POPIA Act. But in that space, how do you see that legislation impacting the use of data in organizations? And is it something that you go, it provides a certain limitation to what's possible, or it's something that you need to be cognizant of, but still being creative in terms of your use of the data to actually influence your customers?
Thanks, Carl. My approach is the latter. I think, firstly, as an organization in South Africa, we're subject to POPIA, Protection of Personal Information Act, which is basically the same as GDPR in Europe. So from a data perspective, what I have seen in the organization, because we put regulation and policy as the forefront in our mind, we built data solutions that are not client-centric, right? And what does that mean? Today, Sanlam struggles with a simple problem, which is called single view of client. Why? Regulation blocks different legal entities in the organization from sharing the data, even though the same client may be in different business. So you got to be cognizant that the regulation is there and the regulation has to be complied with, but you got to rethink about client first, because client equals business equals growth, right? So when you look at it through those lenses, so I'm fortunate in that I run a payments business, and I just happen to have the transactional information for clients across the organization, across multiple businesses in one place. So that means leveraging of that kind of capability is how we manage things like GDPR and POPIA, but then also how do we manage ongoing consent management when it comes to engaging with clients. Now, part of this is also about, if I am relevant clients where it matters most, which is my day-to-day transactions, I will get far more buy-in for clients saying, I consent. So it's changing our mindset from a product perspective, because we are taking an approach of value creation rather than here's a product that is underpinned by all the regulation and T's and C's, and we keep that arm's distance away from.
And in this process, Neelan, I guess it comes to the point now of going, you need to be aware of things like the restrictions in terms of what you can do with data, store with data, etc. But beyond that, for the executives that are on the call today, it becomes, I think, a realization to go, as exemplified in the FinTech space, there are so many more dimensions you need to be aware of these days in terms of your business. There's the technology. There is the whole financial positioning and how we've got to the systems that are in place and how influential those are. Understanding your customers, having data on them so that you can differentiate, and realizing, I suppose, that your competitors in the world that you live in now may not be the ones that you traditionally identified. So in financial services, it would have been banks, it would have been insurers, it would have been those organizations that are similar to me, I would say, how organizations might have looked at it. But to the point that you've raised, your competitor in financial services is already an organization like Amazon. It is already an organization like Meta. Anybody that has a significant community of users and that is reaching that group of users through digital channels now has the opportunity to extend into financial services. And as per the example of the Chinese companies, grow horizontally across that to provide a comprehensive set of services that mean super app capability, single marketplace, and influence in terms of that buying community, right?
Absolutely. And I didn't include it in my presentation. I think I read something recently. There's roughly about 2.5 billion gamers globally. So think about the gaming community and the likes of Meta, Sony, Microsoft. Now, why would a gamer want to leave their virtual gaming environment or their Meta environment, go somewhere else and do a purchase or a transaction? So what does that mean is these companies actually have the upper hand because you've got their clients engaged in something they love. And if they're engaged in something they love, upsell becomes a no-brainer, even if it's at a premium price. Because it's the convenience, and it's exactly what you said. It's a super app of services. It is convenience. I don't have to go anywhere else. And competitors are not the traditional competitors we know. We are competing with telcos. We are enabling and we're competing with telcos. We are enabling and we're competing with retailers. And that's the world, and that's how the world is shifting and has shifted.
So in this convergent space, and your example again is very relevant to South African audience. There's one of the banking institutions in South Africa that's a recent startup that has grown fairly significantly in terms of the demographic that it was selling to. And its most recent set of adverts out there in the public space is about having revolutionized banking. They're now revolutionizing how people connect, right? So they're going the telco side or MVNO in terms of what I expect is behind the scenes. That convergence and the dynamics that are there and the challenges that are there, I think that's probably true for all the executives on this call going, I'm in a space, I'm aware of the tech, I'm aware of some of these things coming along. Where would you point them to go in order to be an effective leader in your organization these days? These are some of the additional things that you need to either complement in the way of your skills or your people or your organization that are going to allow you to be effective in these kinds of environments. What might those things be?
I think one of the most important levers is strategic partnerships or partnerships. And it's partnerships with extended organizations. When I look at it from my perspective, you continue as an organization to do what you traditionally do. We still sell insurance. We still sell life and savings and investment products. But if you're not extending that deliberately and enabling platforms that allow you to do that at scale, then you lose the game. Because ultimately, the partnership model is we are moving into a world where the attention span of consumers is really low, but a world also where their tolerance for poor service, poor engagement, and slow responses is getting lesser and lesser and less, right? And you look at the younger generation, it's prevalent there already. So we're moving into an era where if we can't engage, lock in a customer in a matter of a few seconds, we lose the game and we lose them to a competitor. But part of this model is strategic partnerships. And when you look at platforms and how you engage, make sure you partner right, but partner with scale in mind. Look at platform capabilities with scale in mind, but also underpin that with data and insight, because that is what allows you to measure what is really going on and gives you the ability to tweak.
Fantastic. Neelan, sorry, I just want to check and see if there were any other questions that came through at the moment. I don't see anything else that I can pick up at the moment. We're right on our hour, so I will kind of draw it to a close there. Again, Neelan, thank you so much for giving us part of your day today to talk about your experiences and your insights in the fintech space. That's certainly been enlightening. It's certainly for me, I always go away from your talks with a whole bunch of new things that I need to give more thought to, and I'll probably have questions for you about those soon. If any of our audience do have anything else that they think of post these sessions, welcome to contact us, and I'm happy to forward those on to Neelan. Thank you all for joining us today, and hopefully you gained significant value out of our session. Do join us again on the next DVT Insights session, which will be coming up soon. And Neelan, final word through to you. I would say thank you, sir. And if you have any last comments for our audience, let's have that insight. Thank you, sir.
Yes, thank you, Carl, and appreciate the opportunity. My only advice is be courageous. We are entering an uncertain world. Be courageous and don't limit your thinking about your own ability.
Awesome. Neelan, thank you so much. And to our audience again, thank you for joining us. We'll see you again soon at the next DVT Insights session. Have a great day.
Thank you. Bye-bye.